Hey everyone, welcome back. I told you I'll be back with some more reserve rights today. So, price analysis and price predictions. Let's see where we can invest from. So hi everyone, welcome to the channel. If you are new, subscribe, bell button, like and comment. Say hi as well. Thank you for the response on this video as well. I tweeted about it and my Twitter just went boom. Please do follow me on Twitter, and if you've not checked out yesterday's video, check it out because I spoke about this in length. So we're going to talk more about what the future holds, investment wise, and most importantly, price predictions. I mentioned certain things yesterday regarding I think this is undervalued and where the realistic price points. I've already had some really silly price predictions in my previous video. Yeah, just be careful with certain things, right? With that in said, I'm not a financial advisor. Everything that I say could be absolutely gobbledygook, and ultimately I am risking what I can afford to lose. Price levels, always good. We're going to look at them, and we're also going to look at the futures side. So if you have not seen yesterday's video, a little bit of a snapshot, it is, in my opinion, a real good option for the future, solving a lot of real life problems right now with hyperinflation. But the main thing we want to talk about is obviously the longevity of this. The world is going to shit, COVID-19, economies are dying. This could be a very interesting solution for a lot of countries that are printing out money hand over fist, right? Simple as that. So let's do some price analysis because let's go for it. Now, this is what we've got. Now, it's dipped since yesterday, as you've probably already seen, by the 12%. I bought a little bit yesterday. I've got some spare equity laying around for some further positions because I want to add as much as I can. And I'm going to just keep buying the dip because I rate it that much. I really do. Fundamental wise, it's like top drawer. There's some little elements that I don't like. The fact that it is an ERC20 token. Not the best in the world, but also you've got the high supply. Doesn't really bother me that, because I'm looking more of the way it works and how it works and why it works more than that. Not to mention who the fuck is involved in it. It's crazy when you think about that. So with that in mind, let's do some simple TA. First things first, we need to discover where the key levels are. Now, I bought, and we're going to look at two little things in a minute. We're going to look at two little sections, reason being why, and we're going to do some certain things first. We need to look at the psychological levels of the weekly time frame on the fib, for example, here. We need to see where these kind of motions are. Now, what these kind of represent is kind of key little levels that we should really take notice of in some way, shape or form, where this is where we could actually bounce back up to. So with this in mind, if you have no idea about technical analysis, and you're probably going to comment saying, well, this is all nonsense because why does it work? Well, you'd be surprised at how good long-term trend analysis is for targeting projection, especially when you're using the Fibonacci, because you often find that prices will retest certain places, and those certain places have a degree of, substance. I'm not going to look at the lower time frames on this one because it's a bit far-fetched. With that in mind, we'll go to the daily time frame, but I want to mark off that level there. So these are kind of areas where the weekly time frame could actually bounce up towards. Obviously, we've hit this level here, we've turned around a little bit. We could actually go a lot higher, who knows? Okay, just these are here for the future reference, right? Simple as that in terms of these levels here. Moving on to the daily time frame, it looks a bit more interesting. You can see how prices reacted to these levels, and it makes life a little bit easier for us to map out. Now, you're probably thinking, well, why did I invest yesterday when it's gone lower today? Well, you got to look at the whole entire move. The reason why I bought yesterday was obvious. Can you not work it out yet? We are very close to the reaction point of this 618. I bought at 0.135 yesterday, which is just above where my cursor is right now. The reason why I bought there was because A, price level was there, and B, I just knew it was close to the 618, and I thought, well, fuck it. There's no real harm in that. We know what happens in the real life world. In the real life world of any sort of trading and fundamental analysis, price reacts to these key levels. Now, as I said before, This is all here for a reference. It's all just a reference point. I knew that there was support in and around these regions, as it has been resistance before, it has also been support before. We are now on the nose, which is why this video is being done today. But as I say, I jumped it yesterday because, well, I'm not going to gain much more from a little bit of a dip. Now, ultimately, that being said, I've not gone all in. I've not put all the equity that I want to put in this now. I will wait to see if it goes lower, because we might go lower. There's no right or wrong reason. This is why it annoys me a little bit when you look at, my YouTube comments go, well, you're saying what and if. Well, trading and investing is all about possibilities. There's no right or wrong answer with any of this. That's the thing. It's reality. You're either good at what you do or you've got a plan. I usually have a plan. My plan is usually risk management. I like to buy at certain levels. And why? Because most people look at those levels. So what we need to do now in terms of this, we need to highlight simply, and I can't really justify this any more than just saying this level. Why? Because it's the 618. It is the obvious level. This is where reactions could actually take off. Now, that being said, we've also had support levels in and around where this has been in the past. We've dipped lower. We've actually been to this weekly level, which is actually the 786. So there's huge confluence here with this entire move, going from this low, the start of the move, to the top, boom, boom. This could actually be support. It could be a reaction sort of element, but also you got to look at the grand scheme of things as well. We could actually go from here down and actually go lower and form another low, maybe here or maybe even lower, which would actually pinpoint this area here, which would be an absolute savage correction, but as a buyer could be quite good. But I think that is a tad unrealistic. So overall, that is one situation there. The one thing that we need to also mark out as well is just simple levels. Now we could make a note of this level here if we want to, but in my opinion, we'll wait and see what happens. But for me, it's entirely up to you how you play this. For me, overall, this isn't a bad place to be in the grand scheme of things. If you bought on the hype, cool. What you want to buy is on the lower levels of the hype dying off and people are starting to go, oh, okay, chill out time. That is the most important thing. So other areas to kind of consider. So if you've not seen on the chart, and I'll zoom in a little bit so you can kind of see it, this level here is roughly, let's just say 0.0125, right? Quite low when you look at the grand scheme of things, where it's been what, over 3 cents. So it's over half in value, dumped massively, and it's starting to form an uptrend right now. It's currently retracing it into this 618 level. This could take off again. Looking at the lower time frames, on the 4-hour time frame, it looks quite savage, but it still is, as daft as it sounds, it still is in an uptrend. Broken structure a little bit here, but overall, if you're looking from that structure, still could be absolutely fine. So just be careful overall. Don't worry too much about it. But one thing I want to make note of as well is obviously other levels just below here. If you zoom in enough on the chart, you can see where supports and resistances have been. This one obviously here, a nice little round number. You could probably actually argue, whoa, we're going to do that. Argue, nice round number there. If I just change this to the daily, basically psychological level of 1 cent could be another little place to be and hover around that level as well, which is obviously halfway between the 786 and the 618 of this daily region. So just keep an eye on this region. But as I say, it could actually go lower. If you want to go for a real low ball order, look at that level there, 0 basically half a cent in and around that region where it's rejected this level. But as I say, it's all probability. If it goes that low, cool, whatever. In my opinion, I'll be buying, doesn't matter. But the idea is they're there as a contingency. Do not go all in. Make sure you have a plan, and this is my plan. The green levels there, as you can see, they're a bit wishy-washy as it stands right now in terms of my levelings, but they are there for future reference. Future reference that we could retrace this entire dump and actually retrace up to these levels and go higher, which is kind of, we need to take each step as it comes. If we're looking overall though at this entire swing as well, from this daily swing, and looking at where we are right now, we could actually go a little bit lower than this region on the 618 levels if we're looking for it, or if we're starting from this swing down here, which is even more important. The reason why I'm starting from this one is because there's been an impulse, it's pulled back into this region, go to these wicks, it's pretty much 618 levels, and we could go higher. Look at the confluence between the extensions up to this region here. It's vitally important. Also, look at where these wicks have stopped. You know, look left, woohoo, hello. So it looks like an uptrend as it stands right now, so just do not be alarmed. But you got to remember other psychological sort of things. Bitcoin, what is it doing? Is it mooning? Whatever. Ethereum, what is it doing? If Ethereum moons, bet your bottom dollar this will go with it. So there you go. Daily levels, it's in confluence. It's looking quite good for me as it stands. But that's my take, not financial advice. For me, investment in and around this region is the best possible opportunity you're probably going to get, and obviously lower. Don't be buying up these levels. Don't be FOMOing at these levels. Don't be FOMOing at these levels. Don't be FOMOing because it's doing well. Look at the dip. It is a dip. Wait for it. So let's talk one more thing finally. I mentioned before price predictions, where I think it could go. And the one thing that we need to look at is obviously overall market capitalization. We're going to get an increased supply over time, obviously, with the way that it works. The protocol of buying the assets, reserves and stuff like that. Ultimately, though, I still think at 120 million market cap, very, very undervalued for me, my personal opinion. When you think of how many countries are going through issues, how much in terms of use case it will get from those people alone, and then the ability to stabilize that coin, well, it's going to work via the physical asset investors and obviously this token alone. That being said, is it too unrealistic to say $1 billion as a market cap is unrealistic? That will give it roughly 10 cents, give or take. That would be the price. I would not be shocked in the slightest to see us as an asset with what the magnitude it has in the top 20, in my opinion. Minimum. Which is roughly what? Just about an 8x gain from here. That's minimum. In terms of other price analysis, I mentioned yesterday as well XRP. XRP is currently 11 billion market cap. It's been a lot higher as well. When you look at the fundamentals as well regarding the token supply, it's not too far away in terms of total supply. Obviously, circulating supply is totally different. But as I say, it's going to increase over time. I wouldn't be shocked in the slightest to see reserve rights, in my opinion, up towards a $10 billion market cap at least in the next run, in the next bull run, proper run, not a little funny run. So is that realistic or not? What do you think? But for me, I would not rule out, in my opinion, anywhere near this level. I think this is definitely a possibility. I wouldn't rule it out. But that doesn't mean FOMO in and put all your life savings in it, because anything can happen. It's all projections. It's all kind of like looking at what's similar and where others have been. XRP has been a lot higher than this as well. At current price levels, if I was to invest now in reserve rights and it was to go to 1 billion market cap or even higher, I'd be incredibly happy with an 8 to 10x gain of my money. Obviously, anyone would. But I've already had comments on my YouTube, on my Twitter, etc. saying $10, $20, $30. Do the maths. It makes it a lot harder when you're starting to value things into the trillions and the multi-trillions versus the billions. You've got to walk before we run. Certainly in this case, we're at the crawling space. So, that being said, realistic expectations in a bull run, if we do not get to 1 billion, I'll be disappointed. But at the same time, I do feel that is very, very possible when you compare what relationships it's got, partners, potential Coinbase listings, PayPal, Chainlink, interoperability. It's kind of good. So, there you go. Enjoy.